Hello, today we're speaking with Brennan Spellacy, co-founder and CEO of Patch. Welcome to the podcast, Brennan.
Thanks for having me, James. It's great to be here.
Fantastic. To start with, could you tell us a little bit about Patch?
Absolutely. So Patch, in one line, is a platform for negative emissions. So what that means is tech-enabled or technology businesses can integrate with Patch's API to take CO2 out of the air. On the supply side of our business, we typically partner with a wide variety of carbon removal projects, whether that's direct air carbon capture or reforestation. So we have a wide variety of businesses building either carbon negative, carbon neutral, or climate positive applications, ranging from carbon neutral delivery to credit cards that put 1% of their interchange into carbon removal.
And what drove that initial decision to start Patch?
So the initial decision to start Patch goes back to when I was studying chemical engineering at McGill. So I've always wanted to go and try helping mitigating climate change. I thought I was going to be designing renewable energy systems initially. Out of school, I actually only got jobs in oil and gas. So that was the opposite of what I wanted to do. So I would then become a programmer at several technology companies. And it wasn't until April of 2020 when I decided to leave Sonder, which was the company I worked at before starting Patch, that I decided I wanted to get back into climate. At the highest level, when we were looking at where greenhouse gases were coming from and how we wanted to put a dent in climate change, there were two major buckets. The first was decarbonization. So that's decarbonizing the grid, storing renewable energy, consuming less, things like this. We felt in aggregate there was a lot of momentum behind effectively the emission reduction bucket. And while we still have an immense amount of work to do, we felt like there were really meaningful tailwinds compared to the former bucket, or the other bucket, of carbon removal. So the act of taking CO2 out of the atmosphere and storing it in some sort of stable form. And so, most climate models have us needing to do removing from anywhere from 10 to 20 gigatons of CO2 at its peak. And we don't even do 100th of that capacity globally. So the intent behind Patch is to make it incredibly easy to gain access to carbon markets and therefore carbon removal to help scale carbon removal globally.
And you mentioned we a couple of times there. So I suppose who's that kind of early team and any potential co-founders?
Yeah, absolutely. So I have one co-founder who I met at Sonder. His name's Aaron Grunfeld. He was the first employee at Sonder, and he was the one I started Patch with back in April. And since starting the company, we've grown to 6 people, about half engineers, half go-to-market.
I mean, incredible kind of progress in less than a year, especially in a year with COVID. I suppose what are those, once you kind of made the decision yourself and Eric to kind of make that jump again, back about 9 months ago, what those first kind of 3 to 6 months look like in terms of your MVP, your early users, and all that kind of thing?
Absolutely. So because we were just a ragtag team of 2 people, I was doing all of the programming as well as investor conversations. So we've been fortunate enough to raise some venture capital to date. So I was splitting my time between actually building the first version of the software platform and the API, tapping into my past programming experience. And Aaron was primarily focusing on go-to-market. So having conversations with either technology or tech-enabled businesses to understand how they were thinking about sustainability, carbon removal, things like this. As far as who we were speaking to, it was all over the map, from very small 5, 10-person startups that might be as quote unquote, I'm doing air quotes, well known as Patch, so not known at all really. So like large banks in Canada and the United States. So we were all over the map as far as target or lead size.
And that, at those kind of early stages, you're trying to figure out those users, let's say you're trying to have a conversation with a large bank. How did you go about that? Was this kind of sending tons of cold email or cold outbound and just seeing what stuck? Or did you have any kind of relationships or ins that you could kind of work on?
Yeah, absolutely. So Aaron and I were both very fortunate enough to be early employees at a high growth startup. So Aaron was the first employee at Sonder. I was the 15th. And so we got to see that company grow from about, 1 to 15 people to 1,500 people over 4 years. And when you go through that, you meet a lot of people, whether it's in the Bay Area, the Montreal tech ecosystem, the Toronto tech ecosystem. And so we were fortunate enough to basically tap into our networks that we had built by being in a high growth startup and kind of leveraging that network into proliferating to get to speak to other people. So almost all of our customer intros were warm. We had some cold outbound, but the majority of our conversations that we had, especially the ones that converted, were through some sort of warm introduction that we were able to get from our past experiences, either at Sonder or at Shopify.
Yeah, I think that's absolutely kind of great advice to any kind of early founder or future founder, you have to leverage pretty much every advantage you have, and you might be bugging like your colleagues who barely know you, and it's all necessary in order to kind of try to get to those kind of first initial bits of traction.
Totally, absolutely. What's interesting is that that's actually one of the why I would encourage. I mean, there's so many like entrepreneurial paths, and no one is right. But something that I feel like the reason Aaron and I have been able to move as quickly as we have, as opposed to if we started this business like right out of school, for example, was the fact that we were able to essentially work at a startup with training wheels on before for 4 years and understand like what went well and what didn't go well, who should you speak to, who should you not speak to. And I honestly really credit a lot of our at least early traction, or perhaps I don't want to call it early success, but early maybe signs of success or leading indicators of success to our time at Sonder.
Yeah, I suppose when I think about kind of my history, I found it something. I mentioned this in the podcast before, 4 or 5 years ago, and it didn't, go the way I would want. And then I've kind of basically decided for the next couple of companies I worked at, which were all early stage startups, I wanted to be put into positions that were new to me, that would basically, to your kind of term, like give me training wheels for when I kind of refounded something, and like I can start to see some of the issues that I basically the lack of skill sets I had before. I suppose like thinking about you looking back on those 4 years, I suppose how much was that kind of premeditated to a certain extent versus kind of looking back, it was kind of a fortunate accident that you had that experience?
Almost completely the latter. So my experience, or where I've gotten today, like makes, I would say, a lot of sense if you look at it in hindsight. But when I was moving through it, like if you asked me if I was going to start a business in climate in like 2019, when I was like deep in the zone when it came to working at Sonder and building out that business, I would not have said yes at all, truthfully. And it's really like only with hindsight does it seem like it made sense. I think the one thing that was intentional was I'm always trying to do my best to put myself in a position when I'm making a decision between multiple options on where I feel like I'm going to get the most lucky. So like, that's the whole reason I joined the Sonder at all, was not because like this business was obviously very promising. I had no experience in hospitality, but the thing that was really great was the fact that the business was growing quickly, and you have the opportunity to kind of get in the ground floor. So I viewed joining that versus like joining a much larger, maybe expanding stage business, as an opportunity to get luckier, because the upside was so much higher versus you kind of know what you're going to get when you join a large business. So I think that's probably the only thing that is intentional, is how do you optimize for getting lucky, essentially. But everything else, like there was no master plan by any means. It was, I've just been very fortunate, truthfully.
Yeah, no, absolutely. And you can kind of try to optimize optionality, but really, well, the way I always thought about it was, whenever anybody would invite me out for, a cup of coffee or whatever it is, like I would pretty much for many years just say yes, because from my perspective, if it was a worthless cup of coffee, I'm not going to remember it. And if it's valuable, it could be like one of the most important conversations or meetings in the world. And you get to a point where, your calendar is so full and like you actually do have a bit of direction, and you know where you're kind of going. But in that kind of early phase of just trying to figure things out, I think there's a huge amount of value in that. I'm also kind of interested in this kind of timing. So, you started in April, like this is like a month into COVID. There's a huge amount of uncertainty out there. How did that, I suppose, affect that decision?
Yeah. So truthfully, again, as someone who's had a reasonable kind of like a fairly fortunate like career to date, I really viewed quote unquote quitting during COVID not nearly as risky as maybe someone with like a family or like a large amount of liabilities might actually. So it's really just my wife and I, we just live in a 1 bedroom apartment. So the idea of like starting something quote unquote risky as a startup, I didn't really view it as risky, truthfully. During COVID, loads of people were getting laid off as it was. And the fact that we were able to secure some venture funding actually made, in some senses, joining a startup less risky, because I actually knew exactly what our runway was. I knew what we had to get done, versus at Sonder, it had gotten to the point where like the financials of the business weren't actually revealed. And so it's actually, there's no way to, I didn't perceive it as risky because there's no actually way to know when you may be laid off or let go or something to that effect, versus starting a business when I have a very clear vision of whether or not I'm going to have to lay myself off, which thankfully is not yet.
Yeah, no, and hopefully not for a long time. Yeah, I think more and more people are taking on various types of side projects to, mitigate that risk, because, that we're long past the days of you join one company and you have a 35-year career.
Totally.
I think to a lot of people listening to this podcast, even the idea of that is not ideal, even if they could have access to it. Yeah, so I suppose kind of getting back to Patch, could you walk us through like the typical kind of integration process to get Patch up and running on, for one of your clients?
Yeah, absolutely. Absolutely. So it really depends on the industry they're in. and whether or not they have access to software. So, assuming they have access to software and they have control over the code of said software. So, this might be an e commerce platform, this might be a payment facilitator, there's a bunch of different use cases. The actual integration with Patch is actually very, very straightforward, where really it only takes 5 to 10 lines of code to get integrated. Get your API keys, and you're really off to the races. You really just have to choose which programming language you want to choose to get plugged in. The piece that typically takes a bit longer is first project selection. So understanding what is the goal of this sustainability initiative. Patch is happy to recommend the way we think about carbon removal and carbon offsetting and provide a bit of guidance there. But at the end of the day, the business or the integrator needs to have some sort of opinion on how they want to allocate their capital. And the second piece is marketing and visual presentation. So again, is this feature going to be a user-facing feature like a checkbox at checkout, or showing some sort of cumulative tons offset by a particular user in like a banking application, or is this going to be running behind the scenes? And it's actually more of an administrative feature where merchants on an e-commerce platform can just simply click one checkbox to say, make every shipment that goes through my platform or e-commerce store carbon neutral, that has no end user experience. And so once you've figured out what that looks like, then you actually have to move into marketing, and understand how do you want to position it to the people you're rolling out. Is that going to be via an email? Is that going to be via a landing page? And what kind of language do you actually want to use? So what we've noticed, ironically enough, and we're going to be investing a lot more in this as 2021 to make this a bit easier, is integration time takes about a week. But then marketing and positioning and the kind of traditional go-to-market functions might take closer to 5 or 6 weeks, because there's actually a lot of alignment exercises that need to be done within the people integrating within Patch to understand how do we want to position it. But the actual integration effort is usually a few lines of code, and the engineers whip it up in no time, which is pretty funny. We emphasize so much on making a great developer experience that we truthfully forgot about the marketing and sales and go-to-market functions for the people integrating with Patch. So now we're going to be investing in that more in 2021.
And so is that nearly like as simple as something like hey, here's a case study for you as e-commerce platform or e-commerce company X, the zero carbon t-shirt company, whatever it may be, and here's like a mock-up? Or is it something more like, this is a kind of 10-step plan to letting your mailing list know about why you're now zero carbon, or something in between?
Probably something in between. So, we do have a bunch of visual mock-ups. So depending on the industry, we've built almost like Patch branded fake applications to get you an idea of what does implementation or visual presentation of this information, what it could look like. But the other piece is really, how do you aggregate really high quality visual assets, as well as what copy to use when writing either that email or that landing page. So that's going to be the piece we really focus on, which is less around this is the plan, but rather here are all the materials in one easy place where you can get them. They're high quality JPEGs or PNGs. The copy's been vetted by the suppliers, that you can actually use to position it to your users.
And how much of the kind of conversation do you have kind of access to before they even, I suppose, start integrating? So if it takes, this kind of month or two to figure out the marketing and all those elements, I would imagine some of these brands or some of these kind of e-commerce stores, they've made the decision to potentially have a zero carbon product. Are they doing some form of market research, or are they just saying, oh, this seems to be where the trend's going. Let's, try it out and see what happens? I suppose how much kind of prep or pre-prep before they even speak to you is being done at these companies?
Yeah, absolutely. So again, there's a massive amount of variance in the level of sophistication, where we've spoken to some folks where they've actually, put together these customer surveys and large reports, and they actually have a good idea of like, we actually think 20% of our purchasers or our users are going to convert. And then we have other folks that really just want to position themselves as innovators and say, hey, maybe there's one other company that we view as competitive doing something already, and we actually want to catch up and position ourselves like that. And so it becomes less of a feature and more of a table stakes component, where they want to do something because their competitors are already doing it. So a lot of variability there. And in the case where we're reaching out cold, sometimes folks aren't thinking about this at all. And then it becomes a conversation of how do we send them that case study or send them that report that helps them think about how they should be thinking about the climate and the impact they can have on it.
Very interesting. And then in terms of the, I suppose the supply side, these kind of different carbon removal and negative emission technologies, how do you select those?
Totally. So we evaluate them on a bunch of different criteria. As far as how we select them, we will actually let most suppliers on the platform, whether you're at a pilot stage or working on something that's at a bit higher scale or scaled up. The thing that's really important for us, though, is making sure that the purchaser, so the party we're actually integrating with, can compare all these different options apples to apples. So remember, because like the role of a marketplace is to aggregate and standardize and have some sort of trust and safety function. So as long as the project isn't like as long as it exists and kind of demonstrates some basic quality metrics, we're prepared to list them, even if they might not be as good as some other types of projects.
That's exactly what I was going to ask. What are those kind of common metrics that you're trying to apply across all these different providers?
Totally. So the first is it real or verifiable? So, we have this concept of offset verification systems. Have they been verified by this third party? If not, there's actually other proxies. So in the case of direct air carbon capture, there's actually a form of verification they have to do to get the 45Q tax credit. So we actually have some providers producing documents to get that tax credit. If you actually compare what like a Vera versus the 45Q tax credit requires, they're actually comparable, or in some cases, the tax credit is more strict. So even if the DAC isn't, again, doing air quotes, verified, there's actually more work being produced in like a traditional verification standard. So really there's the real and verifiable, whether it's through a traditional registry system or some other proxy. The second piece is the permanence. So as some people may know, not all forms of carbon removal are as durable or as permanent as one another. So we have things like direct air carbon capture, which can be stored on geological timescales, so 1,000+ year permanence. And then you have things like planting net new forests with reforestation and afforestation. And that carbon will only stay in that biomass for as long as the tree lives and isn't rotting and decaying, which might be on the scale of 50 to 100 years, depending on the circumstances. Also, I'm based in California. We're also very familiar with forest fires. So if the tree also burns, the carbon is then re-released as well. And so again, you have price, you have this idea of the verified piece, and then, if you have direct air carbon capture at $300 a ton and reforestation at $10 a ton, the way you kind of justify that is the associated durability and perhaps the geography of it. And so kind of these are the kind of critical metrics we look at. We also look at this idea of additionality, which is, has this capital being allocated stimulated or resulted in some sort of positive climate outcome? What's interesting about additionality is that there are actually some situations where suppliers will evaluate it differently. So trying our best to be a non-biased party where you'll actually compare the counterfactual scenario where if this money was not allocated, would the CO2 have been removed or not? In the case of direct air carbon capture, it's very, very easy because they're building the facility only on the precondition that they have pre-booked revenue to build the facility on. So that's very easy to evaluate.
Right.
But things like prevented deforestation, it's actually very difficult because there are situations where folks will actually be kind of like boxing off areas of forest that say, hey, let's not cut these down and issue carbon offsets associated with them. But they were also never in any immediate threat of being cut down. And then you're in the situation where maybe that prevented deforestation wasn't actually prevented at all. And it was just a forest being earmarked for carbon offsets. So kind of having that nuance and looking at each project case by case is super important. And really making sure that the purchaser understands the associated risks and strengths of each project is important as well. When you buy any sort of biomass or natural solution, there is a possibility things get cut down or lit on fire. And in a lot of cases, people won't have any other recourse if that actually happens. There's no built out, at least that I'm aware of, insurance products or anything like this to kind of back your carbon offset portfolio up, or at least not yet. And so understanding those risks before you purchase is super important.
And thinking through those kind of that risk profile and that you're extending the climate risk profile of, let's say, a specific company. And, it sounds like a lot of these companies, this is early days. It might be either a small company on a product line or a small product line or piece of a large company. How much is large companies, the compliance departments getting involved with this process? Are they, do they need to have kind of this additional verification? I know that there's talk of, the Biden administration bringing in new SEC rules around climate risk modeling, which definitely I think has probably a net positive, but it's potentially going to add also more red tape and documentation. How much does that affect the kind of flow of what Patch does?
Yeah, so right now Patch is exclusively operating in the voluntary market. So it's really up to the corporation to decide what precautions they want to take, truthfully. So we're not operating in the compliance market, whether that's California's low carbon fuel standard or the cap and trade system, at least not yet. And so because of that, it's been pretty easy. And it's really been a conversation with less around the compliance teams, more around the heads of marketing, heads of sustainability. And then there are some situations, like especially at larger companies, where people hire full on either carbon accounting or carbon or climate evaluation teams. And so it's really all about figuring out what those people need to feel comfortable, as well as understanding what information is actually available, what's actually doable. So it's been a little bit all over the place, truthfully. It's actually quite undefined as far as today. There's no five things that every person has asked for.
And thinking about the business model itself, I suppose, how do you currently monetize it? Because you basically have this, you're basically infrastructure, but you also have this marketplace dynamic. And how does that all work in terms of monetization?
Absolutely. So right now, the way we monetize is we charge a fixed fee per ton of CO2 pushed through the system. So the traditional carbon offset broker model or carbon offset retailer model is a percent of GMV, a percent of gross merchant value or volume, where if you're selling a $100 ton of CO2, they might take 20% on that. So their take rate would be $20 on top of $100. So it costs you $120. What Patch does is we actually charge a fixed fee that goes down with volume, such that if you purchase a more permanent and therefore expensive form of carbon removal, the patch fee is actually not going to scale up. And we're really excited about this slightly different tweak because it's going to, or at least our aspiration is for it to incentivize people to move up market and not punish them with a higher patch fee for taking a more permanent step to removing CO2.
So when you say upmarket, does that mean just basically more expensive or more permanent or a mix of the both?
They tend to be fairly correlated. So most of the time, if it's a more permanent form of carbon removal, it tends to be more expensive. That's the case with like enhanced weathering, direct air carbon capture, et cetera. That might change over the next 5 to 10 years as we traverse certain cost curves. But right now, things tend to be positively correlated with one another, price versus permanence.
Understood. And then you were saying that down the line, you're hoping to kind of develop the monetization model in other ways?
Yeah. So then eventually there's the idea around offering more complex and power user features for the purchasers. So the idea is, we have this infrastructure that we built out in this marketplace model, but there's actually a wider use case of things that purchasers may want to do, whether it comes to estimating footprints, whether it comes to building more complex portfolios, where we might actually have some sort of base monthly SaaS type pricing eventually to kind of charge for those specific features, and then as well scale with volume pushed to the platform. Right now, we're just doing volume and value based pricing. There's a possibility we might move to some sort of recurring revenue model in addition to that.
Yeah, I definitely feel that. The last company I was at was a marketplace, like a B2B marketplace. And I'd say every 2 months, the CEO and I were talking about how to add SaaS features to kind of help with things like seasonality and so on. So, but I mean, thinking of the idea as a marketplace, which is, I suppose, the bigger headache for you right now, demand or supply?
Well, truthfully, I don't know if either is I would describe as a headache, but the way that we think about the problem, as I'm a big subscriber to the way Bill Gurley thinks about marketplaces, which is whoever owns a meaningful amount of volume as well as consistent demand is going to eventually win over suppliers in the long run, right? Like you can have a huge wealth of high quality supply, but if you can't consistently generate meaningful cash flow for your suppliers in the marketplace, they will churn and go somewhere else. And there's a lot of instances where it's actually easier to churn off as a supplier than it is as a purchaser. If you have specific workflows built into, if it's Patch's API or the way you transact, or if you only have approval to buy from a specific type of marketplace, the demand piece can tend to be a little bit stickier in a lot of cases where suppliers, I mean, when I was at Sonder, we would cross list across 5, 6, 7 different marketplaces for our supply at the same time. And we would only give more supply to the marketplace that produced more demand. So I've been in those supply side conversations before. And at the end of the day, if you can't deliver meaningful GMV, the rest of it doesn't really matter.
Fascinating. And so in those early days, you're basically, that outbound that you and your co-founder that you mentioned earlier, you were doing, that allows the buy-in from the supply from those various kind of carbon sequestering verification companies and so on.
Yeah, exactly. Exactly. So, I mean, it's a fairly simple and maybe what is a capitalist forward way to think about it. But at the end of the day, if you bring suppliers money to help them run their business, they're going to want to work with you in most cases.
I mean, it has to be every tool in the tool shed for climate. So yeah, I absolutely have no problem with the force of capitalism kind of working on these things. And I suppose, speaking of capitalism, like, the competitive nature of these different approaches, there's a big announcement from Stripe and there's a few other kind of companies kind of popping up in this space. How do you think about the kind of competitive landscape for, what Patch does?
Yeah, absolutely. So, as far as the way we position ourselves today, there's no direct competitor to Patch in that we take this API first approach, as well as we are agnostic to technology type, right? Where we can have traditional carbon offsets, we can have more cutting edge carbon removal on the platform. You have the Stripe announcement that you mentioned. Right now, it's currently a no code approach to contributing to, I believe, 4 different negative emissions projects, most of which are actually listed on Patch as well. I'm a huge fan of what Stripe's doing. I think it's really awesome. And I wouldn't put it past them to actually roll out an API similar to Patches at some point. And then on the other front, you have folks like Pachama and Nori who are doing something similar, but a little bit more tightly coupled, at least today, to a specific technology type. In the case of Nori, that's soil carbon sequestration, and in the case of Pachama, that's forestry-based carbon sequestration. And so there's no direct competitors to Patch right now, or if you wanted to traverse all these different technology types. That being said, I do anticipate this space in general being a winner's takes most, where you might have 2 to 3 really large infrastructure businesses that really eat up most of the demand. Very similar to, not to belabor on the Stripe example, what we saw with Stripe, where you really have only Stripe, Checkout.com, Adyen, and Braintree, which, I mean, and Braintree got acquired, so it's a little bit less compelling. But those are like the kind of big behemoths in the space, and they kind of suck up all the air. Versus if you look at all the SaaS companies that use those 4 businesses, it's 1 or 2 orders of magnitude larger. And so I anticipate something similar happening, where really the value from marketplaces is the diversity of supply, the trust and safety component, and price, especially with carbon. So whoever can aggregate meaningful demand and push prices down over time is going to be really successful. And you can only do that if you have a certain amount of aggregation. So I don't anticipate this space to be really highly fragmented in the long run.
And carbon markets have been around for a while now in various forms, more than 20 years, and there's been kind of some highs and lows of them over that time. And in general, as an outsider looking in, it looks like we still have a huge amount of or lack of transparency across these different markets. Why has, I suppose, nobody up to now kind of really, got us to like a very strong level of transparency with carbon offsets? I suppose, like, if I was a financial trader, why can't I go to Yahoo Finance or my Bloomberg terminal and just type in my carbon offset price and get a quote? It seems that you have a very, very, very fragmented supply of carbon offset credits, and so I suppose what prevented that transparency appearing before now?
Truthfully, I think it's really just all about interest. I mean, even right now, carbon markets are primarily facilitated by people, right? Whether that's some sort of carbon trading desk at an investment bank or a carbon offset broker or retailer. And so because of that, if you think about like what like trading equities used to look like in like the 70s or the 80s, you would call up your broker and talk to them about what bonds you wanted to buy and what equities you wanted to buy. And truthfully, you wouldn't get that much transparency on them. The broker might fax you over or mail you over, maybe the price to earnings ratio or something to that effect. But if you consider the amount of information people were making investment decisions on back in the 70s and 80s to now with like the Bloombergs and the Robinhoods of the world, it's absolutely night and day, especially for the average person. And so I believe we're just going through a comparable transition where once there's enough interest, the demand for improved transparency and reduced friction is going to come up because the interest is there. But until you have the kind of interest and desire to participate in these markets, there's nothing essentially facilitating or encouraging them to become more efficient, which really transparency is a way to make markets more efficient because it helps people make decisions more quickly.
Yeah, that makes a huge amount of sense. And you mentioned earlier that you kind of raised some capital, and I'm sure the kind of vision of the company has shifted over a little bit here and there as you've learned more information. Thinking back to that original pitch, what was the aspects of the pitch that were most compelling to those initial investors? And is there any way that that's changed over the last 9 to 10 months?
Yeah, absolutely. So the pitch really is, and the story really is, at the end of the day, in order to prevent really negative climate outcomes, we need to be removing anywhere from 10 to 20 gigatons of CO2 from the atmosphere per year for the next 3 to 4 to 5 decades, depending on how quickly we reduce and decarbonize the rest of the world. And we do about a hundredth of that today. And so when investors look at, well, there's an opportunity for this early first mover to grow with this market that has to become 100 times larger, and the end destination of the market per year might be on the scale of, you know, 30 to 50, and in some instances, $100 billion of carbon removal per year. There's a massive opportunity there because there aren't that many people there, and they want to be able to ride the curve or ride the market growth curve and kind of support that. I think a great example of this is draw to Shopify, where online entrepreneurship in 2004, when they started the business, wasn't particularly common. And now they have, actually, I'm not sure how many, I think on the scale of millions of merchants on their platform, many of which might not have started a business if Shopify or Shopify like businesses didn't exist. So there's also an element of we think this world's going to look like something in 10 years, and we're going to build software to almost will that version of the world into existence. And there's a similar story with Patch, where we believe we have to hit this specific carbon removal offsetting goal. We're very far away from it. So this is the software we're going to build to help bring people into the conversation and facilitate this type of market growth.
And I suppose broadening out, that kind of vision of the future, those are very, I suppose, difficult goals to hit, but, that makes them no less necessary. What I kind of read about the different types of approaches to climate mitigation, carbon sequestration and the like, there seems to be a bit of a mix between those who say, look, we actually have everything invented that we need today. And it's just really a matter of, more engineers, software or otherwise, more markets, like a place for the business folk, and really just scaling the existing technologies. And then you have other kind of new, kind of emerging technologies, like direct air capture is a really great example of this, where, we're at kind of the early nascent stages of this being a scalable technology. And it might take, 5, 10, 15 years before it's really having a direct impact. I suppose, where do you follow that divide over, what do we need to continue inventing new things, or do we have enough that we just need to, put most of our energy in scaling what we already have?
I have a few perspectives on this. The first is
Sure.
saying we shouldn't invent new things or not scale something, I think isn't the right way to think about it. There's an immense number of talented people in the world as well as capital available to actually do both. I don't view it as an opportunity cost type decisions to be made, truthfully. With the problem as urgent as climate change, I actually think we can parallel path and try both and run experiments over the next 1 to 2 decades. I actually don't believe we can afford to not to. So I think we actually need to do both. And there's also the piece of we don't know what the world is necessarily going to look like in the next 10 to 20 years, which might either enable or inhibit certain types of technologies. So a concrete example of this is, one of the biggest critiques of direct air carbon capture is the amount of energy required to do it and scale that up. And ideally, that energy is renewable, where it's coming from non-carbon emitting energy, so the efficiency of the carbon removed is higher. But if there's an outcome where, what if fusion is resolved in the next 2 decades, and then there's this idea of abundant energy that doesn't produce carbon that could actually make direct air carbon capture far more economical because there's been some sort of breakthrough from an energy perspective. And so and likewise, there could be a situation where the amount of forests that need to be planted is quite frankly just not feasible or maybe not desirable. There might be a certain amount of urbanization required over the next 2 decades that prevents us from being able to, I think it's something along the lines of we have to reforest. I don't have the exact numbers. I wrote something on it on Twitter where we have to reforest all of North America to sequester the 10 gigatons a year, something to that effect, where okay, we're not going to reforest all of Kansas and Nebraska. That's not possible and it's not reasonable to do.
Right.
And the associated maintenance cost is far too high. And so I think there's going to be there are some unknown unknowns that might crop up in the next 1 to 2 decades that might roll certain things in or out. So I think we're not in a position to decide today because I believe that we actually have resources to do both in parallel.
Yeah, I like both of those examples quite a bit. There's also all this work being put into carbon to value applications of various types, and so there may well be this amazing application of carbon, and you basically just need a ton of carbon. Like carbon-free cement, or carbon sequestering cement is like an example. We have tons of carbon, right? Like that's a big issue we have, but it may not be in the form we need. And some of these other technologies might get it into a form that other parts of industry can use in a way that's very not really known today. So that makes absolute sense to me. I suppose just before we kind of finish up, one of the things we're trying to do on the podcast is really encourage people to make the transition into climate startups, either as early employees, buyers of the products, and founders. I suppose if you were kind of talking to potential people who wanted to start a climate startup, what is the advice you'd give them? Mistakes you've made that you'd like to share, and so on.
Yeah, absolutely. So, I mean, truthfully, we're only 10 months into this, so I don't know if I'm really qualified to be giving broad, sweeping advice, truthfully. That being said, I think the one thing that I will, and I'm happy to leave folks with, is depending on where you are within your life, there is higher, quote unquote, higher risk times to do something. And I really believe if, especially if you haven't, if you're in a position where maybe you're just paying rent and you're living with maybe just a significant other or by yourself, leaving your large, if you have like a larger, comfortable job and you're considering starting a business, it's not nearly as risky to take maybe 6 months or a year off to really do a bunch of really meaningful amount of dedicated experimentation and exploration. And the opportunity cost you might be missing out on the upside of running those experiments most likely far outweighs the opportunity cost of not working at that larger, more theoretically stable job that you were at before. As far as it pertains specifically to climate, I'd recommend figuring out what industry or space that you really like working on and then finding different ways to make that industry more sustainable if that's something you care about. And what I mean by that is when people say they're working in climate, there's an immense amount of things you can actually work on, whether that's circular economy work, whether that's things related to recycling, things related to carbon markets like patch, renewable energy. So no one person can be an expert in all these different things. And so really you have to figure out what industry you do want to work on and then what sustainability or climate related problems exist in said industry. I know very little about electric vehicles and the electrification of fleets and battery storage technology, but that's going to be a massive lever for us as a species to help decarbonize the world. And so there's many things that I have no idea about that are massive levers as well. So I think that's kind of the two pieces of, I don't even know if I would dare say that's wisdom, but two thoughts I have on diving into climate startups specifically.
Yeah, I mean, on both points. So on the risk side, like, I'm pretty kind of dedicated to end of year, look backs and future kind of goal setting. And pretty much every year, the note that I have from the previous year is take more risks. And from people on the outside looking in, from a career point of view and everything else, it looks like I take a lot of risks. And even I'm like, you could have taken a bigger risk, you could have pushed it a little bit more. And so that's absolutely, again, with all the kind of caveats that you have to have certain things in place, your health, good family setup and so on. But if you do have those things, like the risk is lower and sometimes not to jump. And then the other one, this is an exercise that I've developed with a couple of friends, which we call kind of climate Mad Libs. And so if you want to kind of get involved, want to start something, pick a technology, pick a region of the world, and pick a business model and figure it out. Try for 2 weeks. Just try to start something in that space, and you'll learn an incredible amount even in those couple of weeks. And after 3 or 4 months, you're a world-class expert in that. I knew nothing about soil carbon sequestration 6 months ago, and now I'm being asked to talk about it at like events. And that's not because I'm particularly special or anything, but it's the kind of thing that you can do because some of this is so new, and the combination of the technology with the business model is something in particular that I think potential founders can really kind of speak to. So Brennan, I really enjoyed this conversation. Is there anything I should have asked you about but did not?
Maybe not around asking you, but there is going back to the advice piece that is worth that I think I'm really happy to continue to share is on the outside for any kind of entrepreneurial experience, it always looks like people are only sharing their yeses or their successes. And I really did not realize how much of a disconnect there was when operating within a early stage startup versus looking in from the outside. And what I mean by that is when we were fundraising, I think probably got said no to maybe 40 or 50 times by either different firms or angels or something to that effect, and really only got 3 or 4 yeses. But truthfully, like that's enough to get a startup off the ground, right? Like I had like a 5% or maybe even less close rate, which is horrible, but that's still enough to get a startup on the ground. And then I have friends of mine or peers or people asking to come on podcasts, looking on the outside in, and everyone's like, "Wow, how did you achieve this remarkable success, or how did you get this done?" And truthfully, well, one, like we haven't done, raising money means nothing. But number two, you should have seen those first 45 no's and how not depressed, but definitely beaten down I was at one point, and you just happen to figure it out. So there is a certain amount of there's a huge amount of information asymmetry when it comes to people who have started something versus people looking at people who have started something. And truthfully, like things I promise you are not going nearly as well as any startup if you're looking from the outside in. There's always a list of 100 things that have gone awry or are not currently going well.
Yeah, no, absolutely. And, imposter syndrome's very real. When I've worked on things and they were even slightly going well from the external, you send out your monthly update and everyone's like, oh, it's great. And well, I know I definitely felt like a fraud because you're only saying the thing that happened. You don't mention the 95 things that just didn't happen. Like I was like, oh, I was hoping to, update on 20 clients, but it was two. And it was like, oh my God, that's two amazing clients. It's like, well, 18 people
Totally.
said no. So Brendan, this has been great. Absolutely kind of always love kind of getting your take on things. I suppose for the audience, Brendan and I kind of started talking kind of at the early stage of my kind of climate journey back 4 or 5 months ago, and has been a huge kind of impact in how I think about things, especially in the kind of carbon sequestration space. So yeah, thanks very much, Brendan.
Thank you so much for having me. It was great to chat.